Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, thank you as always for having me.
Tim, you find a very interesting quote from the U.S. Fed Chair, Jerome Powell. He said, "There's a remarkably positive outlook for the economy that may be too good to be true." Are these words going to come back to haunt him?
I'm afraid they may very well. This thing has drug on and drug on and drug on, and I've come to learn, I think when comments like that are made, sometimes they're being made because they know better. They make them at timely junctures just to try to maybe, I don't know, ease off the tensions, if you will, or instill some confidence or whatever. But, looking at the current market, I guess I just want to go through some things and point out there are some cracks. We've talked about the bubble, but I want to walk through and explain something that's is going on beneath the surface with some of the structure, and I'll hit it quickly. But first of all, the American Stock Exchange, this rally out of the early 2016 four-year cycle low, it has not moved back above the 2014 high. That's at a higher level. That's a bit of a warning. But really, coming out of the January, from the January high, we had that decline into February, March, April, depending on what index you're looking at. And on many of those indexes, there's something called a left-translated structure that's stuck. And what a left-translated structure is, if you look at a cycle of a given degree, you have to break it down, look at it in the proper degree, 1 degree versus the equal degree. If that makes sense? In other words, if the cycle of the equivalent degree is moving up, then it's making higher highs and higher lows. When a cycle of a given degree transitions over to a left-translated cycle, then it peaks to the left of the center. That's called left translation. And then the norm is that it moves below, then it stair steps down and moves below the previous low. Well, we're seeing that taking hold in many of the indexes. We're seeing that in the Amex now. We're seeing that the housing market, I talked about some of these sectors that are weaker. The housing index is very left translated, and it looks pretty much broken at a higher level. Automotive, the same thing. We have that left translated structure that's firmly taken root. Banking, a little bit lesser degree, but there's a left translated structure there. And as you go through these markets, it's widespread. With you guys being in Canada, we see the same thing trying to form. It's of a little bit lesser degree, but it's trying to take root now in the Canadian market. The DAX, the CAC, the list goes on and on and on and on and on. The FTSE. But the most interesting thing with the timing of that comment that you made is just as the Dow Jones Industrial Average is making a new high, which I have said, by the way, that the U.S. markets are providing cover for the higher degree setup that I think is trying to take place. But just as the Dow is making a new high, it's interesting that, number one, the New York Stock Exchange is not. And number two, as the Dow was making the new high on the 3rd, we saw over 3 times the number of new lows versus new highs on the New York Stock Exchange as the industrials was making that new high. So that is not a very positive environment for a new high to be made. In fact, the week before on September 21st, as we moved into that high, there were, looking at it on a weekly basis, there were slightly more new lows for the week than new highs. But then looking at the following week, September 28th, there were 2 times as many weekly new lows as new highs. So as we have pushed into this top, like I said, on the one hand, we have the structure that looks positive, things feel good because the market's at a new high, but on the other, the internals are weakening. And we have this underlying left translated structure in all these other markets and sectors that are warnings of pushing into, a higher degree top in association with what I think is this higher degree shift, if you will, in all asset classes that's centered around the topping of equities, commodities, and what I think has been, at least so far, the bottoming of the dollar, and, as it turns out, weakening bond prices and higher rates.
We'll have more with Tim Wood right after this.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what kind of action are you seeing with commodities, and what are they telling us?
Well, commodities, you look at it from a couple of perspectives. Number one, we look at the somewhat broader CRB index. I've been saying that, this whole turn point, this whole, for the last year, and I know that's a mighty long turn point, but it is what it is. I mean, it's taking time, but there is, looking at the chart, a longer-term 3-year cycle in the commodity complex, and I think that cycle has probably peaked and rolled over. We're seeing that in the metals market there specifically. There's a 9-year cycle that I think has also peaked, but it's reflective in that 3-year cycle in the CRB. Now, part of the CRB is crude oil, and we have had another push up in crude oil. But and it wasn't expected. I really thought we had seen the top in crude oil, admittedly, but we got this last push up in crude oil, and I think that now at least this is an opportunity for that to have run its course. But in light of the higher degree, the evidence of the higher degree cycle top in the commodity complex as a whole, I know that crude oil is peaking. I mean, this should have been a final push into that 3-year cycle top. When you look at something as a raw materials index that I found, it actually does a better job at tracking commodity prices. And, when I look at that evidence, it's like 99.9%. I mean, it's screaming that we've seen the 3-year cycle top. Then if you overlay, and just look at the cyclical pattern of the raw materials index with the commodities index or the CRB, then, you can see that the pattern, the cyclical ebb and flow of the cycle is pretty much the same. So I feel strongly at this point that commodities have peaked and that we have seen a last hurrah with crude oil, and pretty much that metals, same story, that we've seen the 9-year cycle top there. But that takes us into the dollar.
And we'll talk about that, Tim, when we come back right after these messages.
Vadic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vadic's management has extensive potash exploration and development experience in Thailand. Vadic will have marketing advantage compared to Western producers. Drill program commences this spring. Vadic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vadicventures.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman. Tim, so the U.S. dollar, what do you expect there?
Well, the expectation, as you know, has been for the much longer-term bottom in the dollar. And so far, that remains on track. In looking at the dollar and, cutting to the chase with all the details, the bottom line that I see is that at this particular juncture, nothing is ever 100%. There's always something there to give you a little bit of doubt. The dollar is at a somewhat of a critical juncture, but overall, when I say critical juncture, I'm talking about with some shorter term cycles, but overall, it looks like the 4-year cycle low was in fact seen in February, and that we should see higher dollar prices. So I am still bullish on the dollar at this point from that longer term perspective. But that said, the only way I see out is I look at this data with commodities and the continuation. If the can is going to get kicked down the road again, as they say, it looks to me like that the only way to reinflate commodities is going to be if the dollar should collapse. And I'm not saying that it is going to. I'm not saying that it's not. I'm saying that's the only way I see out. If something should change with this longer term cycle that there's no question that was in place. What I'm trying to say is, if that cycle should begin to fail and the dollar should begin to collapse, then I think, number one, I think we'll see it in the charts because I'm aware of it. I'm looking at it and very much concerned about that situation. But until I see evidence of that, I am bullish on the dollar at this point and very bearish on commodities. But in summarizing that, the only way I see the commodity bubble can be reinflated, or not bubble, but the commodity advance can be reinflated, which would in turn, I think, extend the overall bubble in equities and so forth, is a collapsing of the dollar. And that is something to keep an eye on for sure.
Mm-hmm. Now, what does that mean for the price of gold?
Well, obviously the common sense tells you, and if you just do an overlay, of charts, what you obviously see is that there's a somewhat of an inverse relationship. When I say somewhat, I mean it's not hard and fast. I mean, because there's times when price action is muddled and relationships are not 100% clear. But in general terms, there is an inverse relationship, obviously, with gold and the dollar. So you would tend to think that would tell you that gold should go much higher. But when I look at the dollar, the conflict here is that when I look at the gold data, it emphatically tells me that we've seen the higher degree cycle top in gold. So that tends to give, if you throw the evidence in the scale, think about the law of your scale, and you put a piece of evidence on this on the right scale and a piece of evidence on the left scale, it tends to tip the scale in favor of lower gold prices and a higher dollar. But like I said, if we should see something begin to change with the dollar, then it may begin to change. Like I said, that would be the way to reinflate commodities. Well, gold's in that. When I say commodities, I'm talking about gold as well. So we'll see it. We will see it. If the structure begins to change, then obviously I think that it would affect gold prices. But like I said, if you let gold stand on its own 2 feet, it looks bullish for the dollar.
Tim, Bob Hoy said company executives are now selling off their shares, that many of them were acquired through company buybacks. Is this a warning sign for investors?
I would have to take that as a yes. I would. That's not a study that I've personally done, but if the insiders are selling off their shares, then I would tend to think they know something. So I would take that as definitely as a warning. Like I said, there are many, many cracks, and they're all trying to come together. It's a process, a topping process. I have said, I think in the last few interviews I've made the point. I said this is a monumental shift. It is not a simple little turn of a market. And when I say monumental shift, I'm talking about, in general terms, the bottoming of the dollar, topping of all asset prices, including commodities and equities. So, yes, I think maybe, they may be aware.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. You can find us on Twitter @HowStreet. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.